How many times have you got a call on your phone asking you to take a business loan, personal loan, home loan, or a new credit card? I have got 15 calls in the last 1 week and they are extremely annoying. But these annoying calls are actually making a lot of youngsters in India take up loan. Why are so many people taking car loan? Why are so many people taking home loans when they're still young? And why do we need so many credit cards? Are we moving into a debt culture like US? This is extremely annoying, but this sector is also growing really fast. Now recently I made a video on the Indian fintech ecosystem and there was one sector that was doing extremely well, and that sector was lending tech. But wait, what is lending tech? Who is India lending to? And which sector is taking the most amount of loans in India? Now, some things are good, but some things are really bad. And also, there are some statistics in India that are extremely shocking for you to understand. I've got my hands on a beautiful report made by CIRF by people like Vipul Jain and Shrikant Goli that talks about the entire lending ecosystem in India in 2024. And this report is shocking because this has facts that the banks don't want you to know. So welcome to Breakdowns. So guys, before I begin, let me tell you a story. Now, in the last 2 years, I have taken 2 loans. One, a car loan, and one, a home loan. Now, this was not possible even for me 10 years ago. Because 10 years ago, the lending landscape in India was very different. And today, with all the new technology that has come in and with UPI that has kicked in into India, lending has become extremely easy. It's become so easy that you can get loan in your bank account in 10 minutes. Just imagine that. But me taking a car loan, a home loan, and using a lot of credit cards, I'm just a small speck in the entire ecosystem because this market is worth 174 lakh crores. And it is also one of the fastest growing ecosystems in India because it is growing at 11% year on year. That means every year, massive amounts of people are picking up loan at a high interest rate instead of saving their money in their bank account. But for you guys to get little more detailed understanding of this ecosystem, let's break down and understand what are the 3 sectors where lending is happening and where all the money is going into. Number 1 is retail, where me and you come in. Number 2 is microfinance, which are very, very small ticket loans. And number 3 is commercial loans. Now, commercial loans are basically loans given to businesses to operate. Now, if you look at the data, that the retail component, which is me and you, have approximately 85 lakh crore and the commercial is at 86 lakh crore. So if you look at the retail market and the commercial market, they make up 90% of the entire lending market at 164 lakh crore. And the microfinance space is a very small portfolio of only 2.9 lakh crore. But there's one more hidden interesting fact that you need to see, and that is the growth rate of the loans that are increasing in retail, microfinance and commercial. Now, if you see that the retail market loan book is growing at a rapid rate of 22.9%, which is huge. And if you look at the commercial lending rate, you'll be surprised because it has gone up to 70%. Now, this 70% can also be, to be honest, in my opinion, can be the lending that has spurred because of COVID. Because during COVID, a lot of banks and a lot of financial institutions were given extra funding by the government to help small companies survive because they were the backbone of the Indian industry. So that is why we see the numbers are slightly skewed at 70% between 21 and 22. But retail, which is growing at 22.9, had no excuse for this because that is still growing. Now, the reason why retail grew so much in 2021-2022 is also because there were some markets like the housing markets which witnessed a massive boom. So if you look at the report, the top retail loans by portfolio outstanding value. Portfolio outstanding value basically means the number of loans that are still outstanding which people have to pay and close. So it is unclosed loans, not closed at all. 30% of that is home loans, 9.4 is agriculture loans, 9.3 is personal and 7.3 is business. As you can see that 30% of the loans in the current market from retail people like me and you are in home loans. Is that a good thing or a bad thing? So if you ask me, investing in a home is basically like a very good thing to do because it's an asset that you're buying. So worst case, if something goes wrong tomorrow, and fingers crossed that the housing market doesn't go down, you can always sell that property and clear your loan. So that means you're not in a very bad state and you have an asset, which is your house, that can actually help you clear any outstanding loan that you have, which is very safe because the bank is also very happy to give you a loan. Now let me tell you one dark secret about home loans that has changed from the last 10 years. Now let's assume I wanted to buy a home of 1 crore. Earlier, back 10 years ago, I was supposed to put 25 lakh as a down payment. I have to put that cash upfront, and then 75 lakhs the bank used to give me at a nominal interest rate or maybe 8% or 9%. But now in the last few years, banks are telling me that Shashank, you want a house for 1 crore, you only give 10 lakhs. 90 lakhs we will give you loan. People like me will be like very happy, awesome, I just have to put in 10 lakhs, I'm saving my money, and 90 lakhs the loan will come from the bank and I will pay my interest. But do you know that's actually not good? Because earlier I would have saved more to invest in a property, and now I'm taking more loan at a higher interest rate for a longer period duration without any backup or without any security. So this is the dark reality of home loans today, where banks are trying to tease you and trying to tell you that take more loan, because their loan book goes up, they make money from your interest, and you end up paying a lot of interest over a long period of time. So be very careful about this. If possible, put more money upfront, reduce your loan period, reduce your interest rate, and reduce your loan amount. You will be more financially stable. Now, if you see this stat which says top retail loans by volume means number of transactions happening, how many people are actually doing a transaction on this particular place, you will see that the number one spot at 17.2% is taken by credit cards. Now, this means a lot of credit card adoption has happened in people like me and you. I personally have around 4 or 5 different credit cards that I use. I'm not saying it's a good thing, but 5 years ago or 10 years ago, the culture of credit cards was not very big in India. I still remember we were using debit cards for almost everything. But right now, all these amazing phones and TVs come with this beautiful branding, and they always say no cost EMI. This makes the person buy something from a credit card along with credit card offers, which basically force you to take up more lending, which obviously helps the economy because you're spending more and people are making more business, but also you're not saving enough. Now, the second interesting thing that I see here is by volume, it is personal loans. And don't forget, personal loans is also by value. It is approximately 9.3%. Now, personal loans, please understand, it is not like home loans. You get a home loan at 8.5 to 9%. But personal loans, you will get minimum 14 to 15% if your credit score is good. And if your credit score is bad, it goes up to 18%. Now, just imagine, you're taking a personal loan for some problem or the other, but you're paying almost double of what you would pay for a home loan. And it is a very high interest debt that you're taking, or a high interest loan that you're taking, which is going to be very difficult for you to actually clear. And that trend is also doing really well. I'm sure you would have got a lot of calls on your phone by people coming and saying, sir, do you want a personal loan? We can give you instant sanction up to 5 lakhs. Now that is what is happening in the industry right now, which is a very, very, very bad thing. So now we understood that home loans is the biggest loan market in the entire lending space for retail people like me and you. Now we all know that banks are giving home loans, but are they private banks, public banks like your SBI, or are there some foreign bank? Because we need to understand which type of bank is actually lending a lot. And if you look at the stat here, you will see 41% of the total outstanding loans is with public sector banks. Now, public sector banks, for example, is like Punjab National Bank, State Bank of India, State Bank of Mysore, State Bank of Maharashtra. And if you look at private banks, which are like Axis, HDFC, ICICI, they are sitting at only 19.6%, literally half of what the public sector banks is sitting. But then, why is it so different? Even though public sector banks are very slow in what they do, very slow in their process, it's very annoying, but why are public sector banks lending more than private sector banks? Now, this is because public sector banks usually give lower interest rates, marginally lower interest rates. Means if HDFC is giving at 8.7, SBI might give at 8.6. But the advantage here is SBI gives it more easily with lesser restrictions compared to HDFC Bank, that will ask you more documentation and a higher eligibility criteria. Now, why is this the case? Because HDFC Bank is a private bank, and if something goes wrong and they give loans out to people that are bad, they cannot recover that money. But if you talk about a public sector bank and they give money to, let's say, me, and I run away, then they get a bailout from RBI. Now, what is a bailout? This means if some bank in India is not doing well, then RBI from its own pocket will remove some extra money and give it to SBI Bank and say, don't worry, keep this money, continue the lending. Why? Because you can't let public sector banks in India die. They have to survive because that is the only competition to the private sector banks. Now we understood who is giving home loans to the retail segment. But let's understand how much are they taking? How much am I taking from a public sector bank? How much am I taking from a private sector bank? So if you look at the data, it basically says that in 2022, the public sector bank's average ticket size is approximately 30 lakh rupees. And if you look at the private banks, it is slightly higher at 38 lakh rupees. And if you look at housing finance companies, which are solely focused on giving loans to only housing finance people, they are only at 28.5. But another interesting trend here that you should see in all the three stats is that they're all growing from last year. Because the public sector bank went up from 27 to 30, private banks went up from 36 to 38, and housing finance companies went up from 26 to 28. This basically means that people over time are taking more and more money as loans. And remember I told you the 25-75 versus 10% to 90%. Now because 90% is given as loan, people are taking more and more and more from the banks. I hope that it doesn't go up to 100%, but who knows, maybe one day that will also happen. Now let's look at the next part, which is personal loans. Even though the public sector banks are still the highest lenders at 42%, the private sector banks have much more stake than these guys. In home loans, they were only sitting at 20%, but here they're sitting at 37%, just 5% lower than the public sector banks. The data indicates that a lot of people are taking personal loans from private sector banks as well, which was not the same case in the home loan department. Now, if you think this was weird, let's look at the next stat because that is even more weird. Now, even though private sector banks have approximately 37-38% market share and public sector banks are sitting at 42, the ticket size, which is the amount of loan people take, is very different in both cases. If you look at the public sector banks, the average ticket size is 4 lakhs. And if you look at the private banks, the average ticket size is 1.8 lakhs. Now, why is there such a difference? That if I go to a private sector bank, I'm taking less money, but if I go to a public sector bank, I'm taking more money as loan. The difference here again is the key factor, which is interest rate. Private banks will give you money at a higher interest rate because they feel you are a risky person. Whereas public sector banks, which is Jan Hit Mein Jari, which is MER for the people, will give you very lower rate of interest. And that is why people prefer taking even personal loans from public sector banks. So now we understood home loans, we understood personal loans, and we understand that public sector banks are king, right? Everyone takes money from these guys. Now let's go into the next important part or the next important segment, which is the vehicle loan market. Now, if you look at the two-wheeler loan, you'll again be very shocked because the public sector banks and the private sector banks are not kings in this space. Now, if you look at this data about the two-wheeler loan market share, you will see that 64% of the market share is taken by a group called NBFCs. What are NBFCs? NBFCs are called non-banking financial companies. That means they're not a bank, but they're solely here to lend money to you. If they're not a bank, how can they lend money? So the difference between an NBFC and a bank is that NBFCs cannot take deposits from you. You cannot go open an account with an NBFC, you cannot put a savings account there, and they will not give you 4, 5, 6% interest from the savings account. Whereas public sector bank and private sector bank can take deposits from you. So that means NBFCs have to take money from somewhere else and then give you that money. But wait, why is this so different? Shouldn't it be that public sector banks, which are again so friendly to everybody with lower interest rates, shouldn't they be giving more loans to car loans and vehicle loans instead of, let's say, the NBFC banks coming into the picture? Now, the main reason here, which is very interesting, is called dealer tie-ups. What are dealer tie-ups? Now, if you go and buy a car or if you go buy a two-wheeler, most of the time, the two-wheeler dealer itself will tell you that, sir, you have a loan facility from Bajaj Finance, Bajaj Finserv, ex-NBFC, Y-NBFC and SBI Bank and HDFC Bank. What do you choose? Now you'll be like, I don't know these other two banks. I only know HDFC and SBI. You'll be like, no problem, sir, but these guys, which are the NBFCs, are giving it to you at a slightly lower rate, and they have an attractive offer going on. So that is how the entire NBFC market is winning in the two-wheeler and the four-wheeler space, because they also incentivize the dealer to push their products more than pushing the private and the public sector banks. And that is why you can see it that they have approximately 64 to 65%. Now, it's not just that, they also have a lot of innovation, ease of payments that is there, and companies like Bajaj Finance and Bajaj Finserv are extremely big. Now, another thing that we're also seeing is that when you go and buy, let's say, a Tata car or a Mahindra car, most of the time, Tata itself gives you loan from their own company called Tata Capital, and Mahindra itself will give you a loan from Mahindra Finance. Now, both of them are not banks, but both of them are NBFCs, the non-banking financial companies. So that is where the beauty of this game lies. Awesome. Now you're like, Shashank, two-wheeler market we understood, NBFCs have taken massive stake here. I'm assuming that auto loans also will be similar. Not quite, because in auto loans, it's more evenly distributed. 25% to NBFCs, around 37% to private banks, and approximately 35% to public sector banks. As you see, it's an even pie that everyone's taking, but this pie is constantly changing only because, remember I told you, Tata and Mahindra and other companies now are setting up their own finance wings to actually come and give you money. So remember I told you I took an auto loan. So when I took an auto loan, two companies reached out to me. One was my private bank, which was HDFC Bank, and one was Mahindra Finance that came out. And you'll be surprised to know that both companies came and told me that, Shashank, we will sponsor or we will give you 100% of the on-road price. That means whatever the car is for the road, they will give me 100% of that. The only thing I have to pay is my registration cost, which is for the RTO, and any accessories I take. That means 95% of my entire car value was being given as a loan from both the banks, right? One bank and one NBFC, and only 5% which I have to pay to RTO was something I had to put out from my pocket. So you see how the math is completely skewed here, because in car loans, you end up taking a massive loan amount, almost 90-95% of the car value. And that is why you see in the last few years, we saw that Mercedes has sold the highest number of cars in India. It was a record that they actually did. That means a lot of middle class people are now able to afford a Mercedes, which was aspirational, by taking a lot of loan. Now coming to the most important part of this report, which is the credit card section. In the credit card market, it is very clear cut that most of the private banks in the last few years have innovated like hell, right? Companies like Axis, HDFC, there's a cutthroat war between them. And now a lot of public sector banks are also coming in the credit card market, but private banks have taken the lion's share. Now, if you see the stat, it says that the number of cards in circulation, that means how many cards are there, 67% of that is by private bank. And even if you look at the credit card balances, again, 65% are by private sector people. Now, private sector banks are clearly winning the entire credit card race, but why is the case? Now, let me explain. I personally have two private sector credit cards and one public sector credit card. One is by HDFC, one is Axis, and one is by SBI. Now, I would always prefer an HDFC and an Axis over an SBI for two reasons. Number one, SBI gives you very bad credit limit. What is credit limit? The amount of money I'm allowed to swipe. So my credit limit on SBI is 1,85,000 and my credit limit on HDFC and Axis is 10 lakhs each. Now you see the difference? So I don't think it's a good thing for me to personally have 20 lakhs of credit limit, whereas in a very weird way, SBI has given me a credit limit of only 1.8 lakhs. But you know what? A lot of people don't like SBI for that fact, because they want the ability to spend more even though they don't spend more. And that is why most of them will go to a private bank who will say, take 5 lakhs, take 10 lakhs, take 3 times more than what a public sector bank is giving. And that is why they go to a private sector bank. And one more interesting data that we saw was that in the credit card market, the number of cards in circulation has gone up from 11% in 2021 to 17.7% in 2022. Now again, this is because of two reasons. Number one, credit cards have now started offering amazing cashback, amazing air miles, amazing gift vouchers, and it's also made it easy for someone to get a credit card today. Earlier, getting a credit card was very difficult, but right now, if you want a credit card, put in your PAN number, upload your ITR, and that's it, your credit card is approved, which is very, very weird right now, but that's where the world is moving into. Now let's quickly talk about that small industry, which is the MFI or the microfinance industry. Now in microfinance industry, the ticket size or the amount of loan that is given is extremely low. And in this sector, we have seen that NBFC MFIs, which are non-banking financial institutions in the microfinance space, have approximately 33%, and banks have 37% market share in this space. Now, if you look at the average ticket type that is also there, majority of the people who are actually taking money from these MFIs are in the range of 30 to 50,000 rupees. So the 30 to 50,000 rupee ticket size of loan that they take is approximately 40% of the entire market. And people who actually take a higher loan amount, which is 1 lakh and above, is only 2%. That is very, very, very less. So that is why it's called the MFI. Now, where does MFI actually work? Or where does microfinance lending actually work? So MFIs are actually very important in India because they lend to the tier 3 Bharat or tier 3 India. And that is why in tier 3 India, the risk is high because they don't have a lot of credit history, but the amount is also very low. So that is why they offset it. So usually you will see that in a lot of MFIs, bad loans is basically I've given a loan to someone and they have not paid that money back to me. So that is called bad loans or bad debts. In banking terms, which is slightly complicated, it is called NPA, which is non-performing asset, which is very funny because if I don't pay the money back, I am considered as an NPA to the bank. I personally am a non-performing asset. Now, finally, we come to the backbone of our entire lending ecosystem, and that is commercial lending. Now, we all know that businesses need money to grow, right? And every kind of business needs some kind of money to grow as well. So it can be a very small business that takes 1 lakh, 2 lakh or 3 lakh loan. It is also known as working capital loan. Capital used to continue the company. Or it might be even higher ticket loans where people are spending thousands of crores to invest in that company so that they can grow. A very famous example is when SBI and Punjab National Bank gave a lot of money to Kingfisher Airlines. Why? Because Kingfisher Airlines wanted to expand and get more flights and grow their market. But sometimes the business does well and it will definitely flourish. But sometimes if the business does bad, then they don't get any money out of it. So commercial lending, even though it is one of the most important market, it is also one of the most riskiest market in India. Because there's a very famous saying that if you lend money to a person, he's scared about what society would think, so he would always pay back the loan. But if you lend money to a business, then if the business goes for a loss, then he's not bothered because he was like, it's not my fault, the business didn't do well. So that is why banks prefer lending to people like me, because they feel that I'm scared of society and it'll affect my credit score and all of that. Psychologically, I will end up paying my loan completely. Now let's look at who has the market share in the commercial lending space. Now, as you can see, private banks take up 47% of the entire portfolio of commercial loans, and NBFCs take up 17%, and public sector banks take up 23.9%. So as you see, 47% is going to the banks. Now, why is this the case? Why are private banks taking so much market share? Now, this is because, again, you should understand how business dynamic works. Now, most of the companies have an account in private sector banks. Why do they have private sector and not public sector? Because businesses need things done quickly, whereas public sector companies will take a lot of time. Now, if you are a company that is currently using a current account of, say, HDFC or Axis, then when you want a loan, it is easier for you to get loan from Axis or HDFC because you have a current account with them and they have your history. Now, the reason why I would not go to an SBI bank is, number one, they're very slow to pass the loan. Number two, their banking services for a company is again extremely bad. And because of this bad customer experience, people prefer opening current accounts in private banks. Now, talking about growth rate. In 2021, the entire commercial lending space grew by approximately 34%, and back to 2022, the commercial lending grew by 14.8%. Now, is this bad or is this good? Now, please understand 2021 was an anomaly. Anomaly means something weird happened that year, and we all know what happened during COVID. And a lot of people were pumping money into companies because companies were struggling. And the government said, ki boss, please lend to companies because they are the backbone of our Indian ecosystem. That is why you'll see a lot of lending happening at that time. And don't forget, during 2021-22, the interest rates were also extremely low, 6.7%, 7%, 7.2%. Now we have gone back to 9%, 8.5%, right? So at that point, a lot of businesses were taking cheap loans to grow their business, and smart companies actually took it and repaid it also very fast. Now coming to what type of companies are taking massive loans from private and public sector banks. So this is a very equal statistic because private sector companies are basically taking approximately 40% of the market share and public sector companies are approximately taking 36 to 38% market share. That means public sector companies, that means they're listed companies on the Sensex or the stock exchange, are taking a lot of loan from the banks to expand their business, which will in turn grow their stock if it does well. But if we look at the data on the percentage of active loans, that means the number of active loans that are currently there in the market, we see that proprietorship business has 40% market share. Now obviously they won't be very high ticket loans, they'll be smaller ticket loans compared to private sector and public sector. Now let's understand in the next part what is the average ticket size of loan that the commercial industry is taking. Now if you look at this math, it says that through public sector banks, commercial lending is at 3.34 crores, right? The average ticket size. And private sector banks is very similar at 3.3 crores as well. The only weird math here is that it says that others are sitting at 4.11 crores, and that is very, very interesting because they're not private sector banks, they're not public sector banks, they're also not NBFCs. So these might be some other type of corporates or personal loan guarantees that are actually giving money at a very high interest rate. So from what I've seen with this data, we have noticed that most of the loan in the retail segment goes towards home loans, which is a positive thing, which is a great thing. But the scary thing or the negative thing is that a lot of people are now taking credit cards and the active loan balances with credit cards are also going up very fast and very high. Now, another thing that we saw is that the commercial lending space is also doing really well and there is constant growth. And we see that the majority of the money that is taken is by public sector companies and almost the same amount as private sector companies as well. Now, this is a very good sign for the Indian economy. And as I said, we have seen the Indian lending space grow at a rapid pace. Now, if you ask me which sector is going to win, I would say both retail and business is going to go hand in hand. But the fastest growing lending space right now is coming up in the MFI space because microfinance industry in tier 2 and tier 3 Bharat is currently untapped and a lot of startups are now entering that area. And a lot of microfinance companies are also entering that area to ensure they grow a lot. Recently, you would have seen the news that Ananya Birla, who's the daughter of Birla, has now bought a company, I think it was Chaitanya Fin Credit. Now, basically, once they bought this company, the Swatantra Bank, which is what they own, is now the second largest MFI in India. So as you can see, there is a massive untapped market in India, which a lot of people are catching. Now, if you ask me personally, guys, taking a loan for your home, great. Taking 90% of the loan amount, think twice. If you're taking credit cards, great. But if you have 5 credit cards with massive credit limit and you're unnecessarily buying, not great. So I know loans are very good if you do it in the right way. Use debt to your advantage, not to your disadvantage. But if you get swayed away by no cost EMI, credit card instant discount and cashback offers, you will be spending for absolutely nothing. So thank you for staying until the end of the episode. I hope you guys learned something and I hope you guys enjoyed this entire episode. I'll be coming and doing many more breakdowns like this. So if you guys enjoyed this episode, then all you have to do is click on the like button and subscribe. And also, I will see you guys soon. This is me, Shashank Goduppa, signing off. Take care. See you guys. Bye.